How do you get a loan if you're self-employed? That's the question I'm going to answer here. If you own your own business or you're self-employed or a contract worker, is it harder to get a mortgage and what do you need? So my name is Kevin Brierton, Certified Mortgage Planning Specialist. And I'm going to talk about the loan programs, how to qualify, and the requirements for a self-employed borrower. Now, traditionally, a W-2 wage earner generally is able to qualify for a home simply by providing their W-2s, maybe tax returns, maybe not, and verifying they have a job. But when you come to owning your own business, things become a little bit more complicated. So in this video, we're going to break down some general requirements for self-employed families that are looking to buy a house and qualifying for a mortgage. You will need to check with your lender, directly. We're a lender, obviously. Let's talk through it. If you check with your lender directly on more specific programs, they may have available. This is going to be general rule of thumb when you dive into looking at qualifying as a self-employed client. Now, let's begin with especially important rule here is verify how long you've been self-employed. Most lenders and loan programs are going to require a self-employment to be going for at least 2 years and currently still in business is very important. So minimum of 2 years in business and currently still in business. Now, lenders define self-employment as a borrower that owns more than 25% of the business. And they may be W-2'd of their own business, but if you own more than 25%, you also are considered owner of that business. Now, there's a couple exceptions to this rule and the 2-year rule specifically. And so you might be able to qualify off of 1 year self-employment, depending on your situation. If you can show the 2-year history of similar line of work, or you'll need a really need to document how that's going to look. Super important that the income is increasing, because if it drops significantly, that's going to be a big red flag. Because usually what underwriters are going to need to do is do a 2-year average of the income, and if they can show it lining up. So for example, if somebody went from W-2 to 1099, it's very similar, and maybe they're at a year and a half or just under 2 years, there might be some lenience there. So talk through with your lender. Some lenders will even count 1 year of related employment as formal education. So if there was formal education around maybe a medical professional or training in that certain type of work, that may be acceptable for a 2-year work history. Now, it won't necessarily help your average, because you might have to take a 2-year average over that 1 year. So that's something else that could be a challenge for self-employed. So if you've been self-employed for less than a year for a home loan, you'll likely find it hard to qualify for a home loan. But if you meet the self-employment history requirements, the next thing is talk to your lender about the documenting, how you're going to document the income for the last 2 years. So typically this means 2 years tax returns. This is where most self-employed borrowers throw up their hands and say, I don't have 2 years tax returns, or I don't have a lot of income on there. This is very common. So many programs available today out there are able to verify income based on bank statements. So because your tax returns don't show too much income, it might work under a bank statement program. Bank statement programs, you're generally going to have to put more money down. So you can't do like a 3 or 5% down. You're generally going to have to put more money down for a bank statement program. So definitely check with your lender on that as well, or check with us. If you comment below or send us a message, be happy to walk through that with you as well. The next item we'll talk about is self-employment income borrowers overall. Lenders will generally consider what's important about the income itself, right? So most mortgage lenders are going to generally consider the source of income that's stable, consistent, and ongoing. So it's the same for self-employment income. That means all kinds of self-employment income is eligible for mortgage financing, but it's not really limited to business owners, freelance income, contract work, seasonal work, or even side jobs, like gig work they call it now. But it has to be the 3 things. Again, it has to be stable, consistent, and ongoing. So at one point, let's say you did contract work for a period of time, but you don't have any history of doing that recently, or you're not looking at doing that ongoing, that's not going to work. But if you have contract work that's consistent, ongoing, and stable, that is really important. We might be able to use that income. If you do have side jobs or side businesses too, so let's say you work a W-2 job, but you have a side business that you're consistently working, make sure you provide that information to your lender, because that extra income might actually help you get over any hurdles of qualifying. So these types of incomes can be considered when you're owning, or you need additional income on top of your primary income, like we were just talking about. And lenders sometimes even count unemployment income for contract work or seasonal work with regular documented income of unemployment for off-season work. So for any source of income, lender must be determine if it's ongoing. So it's important to make sure it's ongoing. And generally this means It's going to continue for at least 3 years, or likely to continue after closing for 3 years. A history of declining income, though, is not necessarily great. This is not going to improve your chances of getting a mortgage. For self-employed borrowers, a lender may conduct a review of the borrower's business to determine the stability of it and likelihood to continue at the same level. So if you have declining income, or you're in an industry that's declining, so for example, a hotel owner during COVID pandemic, or a builder during the housing crash of 10 years ago, this could be a problem with your approval. So these things will be taken into effect as far as the stability of that specific business. Underwriters use somewhat of a complicated formula to come up with qualifying income for self-employed borrowers. They start with your tax income, taxable income, and your tax return income, and then they add certain deductions back in, like depreciation. So sometimes you actually will use a little bit more income you actually show on your tax returns, which is good. But business owners and other self-employed workers, often make as many deductions as they can. Obviously this serves you well when it comes to tax time, but it really hurts you on your mortgage application. There are many bank statement program loans available today, though. These programs are called non-qualified or non-QM mortgages. This means that if somebody lacks the income for the regular self-employment loan, they may be able to use this non-qualified loan to qualify for an alternative program. Generally speaking, they're going to have slightly higher interest rates and slightly higher costs than their standard programs, but it could be a really good option if you don't fall into that perfect little box. So, and then how are lenders going to document all this? So documenting self-employment income, in most cases, self-employed borrowers need to prove the following documentation of income for the mortgage lender. So 2 years personal tax returns, 2 years business tax returns, including all schedules, K1, 1120, 1120Ss, whatever pertains to your business. It's very important you provide all schedules. Business licenses, year-to-date profit and loss, or P&L, balance sheet. In some cases, you may have to get your CPA involved to get a signed letter saying you're still in business. Some of these documents will have to be provided by a CPA. Some of them won't. So make sure you check with your lender on the specific loan program. And if a business is sole proprietorship, not a partnership or a corporation, you may not have tax returns. So what you'll do is you'll be filing on your Schedule C on your tax returns. And then if you have been self-employed for 5 years or more, sometimes there's more lenience on that. These guidelines have changed over the years. Sometimes you can provide 1 year tax returns or 2. So just make sure you check with your lender. Make sure your income is consistent, but if it's not, if your income is irregular or maybe not reliable overall, generally speaking, the lender may not count it. However, many businesses go through ups and downs, so you need to be prepared to explain the significant changes year over year, and if it makes sense, it could be used. So make sure you're ready to explain any significant changes in your income. Now, a lender will consider you self-employed even if you have W-2 income, but there's a few things here. So if you own more than 25% of your business, if you do not receive W-2 forms, you receive 1099s rather than W-2s, you're a contractor or freelance, or at least 25% of your income is from self-employment. So if a chunk of money is coming from self-employment, that can put you into the self-employed bucket. And also we look at things like dividend interest income may push you into considered a self-employment depending on the situation. If you're a part owner of business and your share is less than 25%, you're not considered self-employed in most cases for the home loan. But remember, you're not required to report self-employment income under Fannie Mae and Freddie Mac rules. So if you do have side businesses, you don't have to report that to qualify for a loan. So if you're a freelance job or small business on the side, you don't have to use that income. If you don't want to, you can ignore it as a lender, but it might be helpful to get you over that hump again to get you qualified. So maybe you want your spouse or co-borrower to be on it and they're self-employed, or maybe they have traditional income. Maybe depending on who you're going to qualify with or without, it might be better to do a joint mortgage with somebody that's self-employed. If one of the people are self-employed, as long as their income's not negative, it doesn't hurt you. It could help you if you added them on there. Most mortgage lenders are fine with this. If you do add somebody that's self-employed as a co-signer, as long as they meet all the guidelines and it doesn't have negative income, it doesn't hurt you. You can also have an option where a co-borrower's income's not counted. So if somebody is on the loan, but let's say one person's W-2 clean income and the other person is self-employed, you don't necessarily have to show that income in most cases if you don't want to. But if you're qualifying for a loan on your own income and your co-borrower is self-employed, lender can ignore that for underwriting. Some cases we'll actually have to look at the household income, but those are going to be more for example is USDA. We'll need to look at household income as total, but generally speaking, you're going to have to be able to ignore that income. So why would somebody want to ignore business income? Well, many small businesses or even larger startups don't even show any income on tax returns, or maybe they even show a loss. Well, these business write-offs are great for taxes. They can really reduce the qualifying and buying power when you apply for a loan. So if you were self-employed and you want to buy a home, it helps to plan in advance. Work with a mortgage professional and get yourself involved with your tax accountant and get everybody to talk. I think that's really important. Self-employed borrowers have access to the same programs, same low rates, same great programs as all the other borrowers in today's market. Just make sure you're working with a lender that knows these loan programs and knows how to help self-employed clients get qualified. Thanks again for watching. Hope it helps. My name is Kevin Brierton, Certified Mortgage Planning Specialist here at Neal Home Loans and the Kevin Brierton team. You can connect with me by going to my website at kevinbrierton.com or call or text us at 480-553-8770. Thanks again for watching, and we'll catch you on the next video. Take care. Bye.